What's going on, everybody? It's Liam Chase here. I'm coming at you with a super early project review. Just wanted to really do this for myself and say that I had one of the first videos outside of Rysk on YouTube when this thing blows up, assuming it does. But what I want to talk to you guys about today is a project that I came across recently on Twitter, or actually not even Twitter. Somebody in Discord, one of the Discords that I was in, was talking about it. And it's actually aligned with what I was already trying to do, working with some people. But what I was trying to do is more off-chain, and this is more on-chain. So Rysk, let's hop into it. They're essentially, and I'm not even going to pretend to be a big Giga Chad brain. I'm going to break down to you what I understand and how that applies to you. But Rysk, they're building a dynamic hedging vault to enable uncorrelated market neutral returns. And so to kind of paraphrase everything that's going on here, and their entire roadmap, their tokenomics, I don't even think most of that is really released. I mean, they talk about the products that they're going to offer, which is a very good sign that they're talking about their product before their tokenomics. I love that. But essentially what Rysk is looking to achieve here is they're trying to give crypto native folks the ability to generate yield even when the market is highly volatile. And so essentially what that means is, let's say you have $100,000 that you want to park, you still want to get good yield on, but obviously you can't get good yield out of a bank account. You can't get good yield on bonds. And maybe you're not too savvy when it comes to generating these type of stable yields in the stock market, because this does involve, derivatives and, a little more complicated financial products. So maybe that's not your thing. Well, Rysk is going to essentially automate that whole process, and really all you're going to do is park your capital there. Um, that's kind of the easiest, simplest way that I can put it. So if you got $100,000, you don't want exposure to the volatility of the market, you could park it here, and assuming this product gets built the way it's intended to, you can earn potentially anywhere from 10, 20, maybe even upwards of 30 to 50%. The APY, the APR on these vaults isn't exactly disclosed because they're still in the midst of building this. But that's essentially the primary goal of this project. And we'll go through the document here. And essentially what I think this will do is kind of bring a more traditional approach to the crypto world. But traditionally within stocks, you kind of have, like, I know there's an official name for it, but I'm not a big Wall Street guy. I know a little bit about Wall Street, but you have a traditional portfolio, which is made up of 60% stocks, 40% bonds, right? And the idea is that your stocks are what's highly volatile, and your bonds, they're supposed to generate you yield and not really move a whole lot in terms of price. Now, obviously, over the last couple of years, with everything that's been going on in the economy, that kind of hasn't been the case. Bonds have barely been paying anything, and bonds have been almost trading like stocks. And so they're just trying to bring that idea, and that's kind of how I think of it, because if you put the 100,000, you could generate 10, 20, 30%, which would be anywhere from $10,000 to $30,000. And it also talks about how it improves your Sharpe ratios and basically your risk management over time. So it gives some examples here. Also reduces the exposure without really giving up a lot of returns, right? Because you're generating the passive yield. So let's see. And I'll link this in the description so you can go check it out. I just want to introduce it to you guys and kind of give you my perspective. Like I said, I'm not the biggest big brain when it comes to this stuff. I know a little bit about Wall Street. I did a little bit of options, but these guys are definitely some giga chads here. But basically what it's saying is, it says, hey, if you hold this Rysk asset, or if you put a portion of your funds into Rysk, you are going to have a better risk adjusted return than somebody that simply holds all crypto, all volatility, right? And so that's really the simplest way that I can put it. It reduces volatility while improving the returns of the portfolio. So I'm excited to see and very likely integrate this into a portion of my portfolio. Probably get a 10 to 40% exposure and have 10 to 40% of my assets parked within Rysk, assuming everything gets built out. But just want to give you this quick intro. So now I can say, hey, I've got the first video on Rysk on YouTube. I know I'm not the first person to talk about it on Twitter, but YouTube will give me some YouTube clout. I've got a couple of things on YouTube that I can get clout for. But yeah, go ahead, read the medium, read the docs. Really interesting stuff, super gigabrain stuff, and we'll see where this project is in a year from now. Maybe I'll be a lot more active on YouTube in a year from now, and I'll have more to say than what I just said today. But anyways, thanks so much for tuning in, and we'll see you soon.